All right. It's been a week since you've heard from me, and the last time I talked to you, I told you that we'd be looking for fireworks and all-time highs, and that's exactly what we got. And I also gave you this free trade idea for INTC, which is Intel Corporation. And as you can tell, this trade is absolutely crushing it. Since I gave you this trade last week on Monday, that entry to today is already a 10.4% gain after only 4 days of holding this trade. So it's safe to say this trade idea is absolutely crushing it and beating the S&P 500. And these are the kind of trades you are getting in my Discord server with those low risk entries and the high reward. Because if you remember back, I told you this was a 3-to-1 risk reward, which meant even if it didn't win, if you take enough of these trades, you are going to end up being a profitable trader. As you can tell, this is definitely going to be a winner, and I wouldn't even blame you if you're already locking in profits because we only have a little bit more upside until we hit the full price target. And I even do think it's possible to just continue to hold this trade while we have the bull breakout above 32. So I hope you enjoyed this free trade idea. Remember, there's a lot more like this in the Discord server. So if you want those trade ideas, you can find out how to join my Discord server in the description below. On top of that, I'm also going to give you another new trade idea today, which we already have this trade idea on the Discord server from the entry at 154. And this is ticker symbol AMD, which is Advanced Micro Devices. And this is another semiconductor stock with a very low risk entry because we were getting it down here at 154, but now this trade has another bull setup, which is the bull breakout to the higher high breakout above 171. And today we did gap up above the higher high breakout, so we had the entry at the open as well as any pullback towards 172. So while you aren't getting the low risk entry that we got on the Discord server, I still do believe there's going to be opportunities to buy this before we hit the price target up here at 188. And I do think we'll go a bit higher towards 190. So this one was an easy 2-to-1 risk reward ratio. And again, as long as you continue to get in trades that have anywhere between a 2 to 3 risk reward ratio, you do not need to win a whole lot of trades to remain profitable. You can lose 50% of the time and still have a very profitable trading account. So again, these trade ideas and many, many more are in the Discord server. And if you want to join my Discord server, you'll also get access to all of my intraday updates and technical analysis. And you can find out how to join my Discord server by clicking on the link in the description below. All right, now jumping over to SPY, I told you that this was likely going to be a bear trap because we had this double top look. And I told you this was the most obvious double top in the history of the stock market. Because we had a strong bull trend, there was no reason to believe this was a double top. So I told you to take the highest probability chance, which was the all-time high push towards 555, as long as we continue to close above the neckline at 542. So you can see you had the lowest risk entry for a bull, which is buying at the neckline, knowing that if we break down below it, that confirms it as a double top. And then it is objective to say it's a double top, but you don't assume it's a double top when you have a bull trend. You continue to go with the direction of the trend because that is your highest probability chance. Remember, this is a game of odds with the best risk reward and the highest probability. You can't just take the best risk reward with the lowest probability because yes, if this was a double top and you shorted the top, that is very low risk, but your probability is very low. Therefore, you're not likely going to win it. So you're just artificially making a low risk, high reward trade because you could say you short at 550 and SPY is going to $0, but that doesn't mean it's going to happen. So take the highest probability. You had the contingency, which was the way out of the long trade if we broke down below the neckline. So we knew to stay long while above the neckline. We invalidated this as a double top when we got the bull breakout and we continued to march higher towards the price target. And I told you with the holiday week, it would likely be a low volume melt up into a short squeeze. And that is exactly what we had. So now if you're bearish and you're sitting on losses, you have to realize these are blue skies breakouts every time we get to an all-time high. It is possible we just continue to go higher. So while it may be very tempting to try to short this or try to call a top, you cannot do that with a good risk reward setup until we see weakness in the price action. And right now, weakness in this price action is going to require us to start breaking down below support. And the critical support is at 548. And the more near-term support will either be the daily 5 EMA or the support zone right around 550 to 552. So if you're still shorting this market after the bull breakout, you are adding more and more risk to your trade. So just be very cautious doing that. This is still a very powerful bull trend, and in very powerful bull trends, price likes to go higher. I do have a resistance here between 555 and 556, and if we break above that, I have us going to 559 to 561. On the NASDAQ 100 triple Qs, we were up 0.24% today, and we did hit the price target, which was the all-time high between 493 and 500. And again, we had the contingency to get out of this trade if we did get the confirmed double top on the breakdown below 473. That never happened, and it got invalidated the day we broke above the double top price target resistance, which was above 486. And as you can tell from the arrow, I nailed this to the downside. I said buy the dip above 476, and then that meant we would likely go towards 493. And that was a very easy trade, and we hit the price target right on time, and we even exceeded it. So again, there's no magic here. I'm just taking the highest probability with the best risk reward, and that was still the long trade in this powerful bull trend. And now that we're getting up here towards the price target at 500, you can get a lot more cautious. And I think this is as simple as just moving your risk level to 493, and the critical support, which means you can still stay bullish above this level, will be 485. So again, whether you like it or not, the market is going higher. It's still in a bull trend, and while it's still in a bull trend, it can go even higher. And the market does not care if you disagree with what these prices are. We can and probably will continue to go higher until people stop trying to call tops and all of the bears become bulls, and only then will we likely see a top in this market. On the Dow Jones, we were flat on the day, only going down 0.06%. In intraday, we did start to get this bull breakout with an intraday higher high above 395. And this is very bullish because we continue to get higher lows and higher highs. And we're now at the situation where we have the full bull trend. And if the Dow Jones can start to break and hold above 394, I think it's going straight to 402. So 394 will be that critical breakout. We almost had it today, but we didn't close above it, so we won't claim victory just yet. But if the Dow Jones can hold above this bull trend with all of these moving averages positively sloping and stacked with the bull trend direction, and then get the price action breakout above 394, I think we're well on our way towards 402. That is a brand new all-time high in case you were wondering, which means the Dow Jones could just be lagging behind the S&P 500 and the NASDAQ 100. If we can't hold above 394, it's fine to say risk off. That is the risk level you want to get bullish above, and you can stay risk off below it. But if you want the low risk entries, you can buy the dip all the way down towards 389. On the Russell 2000 IWM ETF, we were up 0.7% today, and this is going to be a situation where we could have a breakaway gap, which is the gap right here at 201.6. And as long as this gap can stay open, that is a bullish indication that it could be a breakaway gap, and we could be well on our way towards a bull rally, which I am predicting could easily take us to 214 and then into the 220s. Now, this is a low risk entry as long as you're buying above 200 or 198. And then if you want the bull breakout confirmation, you're waiting for the break and close above 203 to 204, and that'll be your price action confirmation that we actually do have the higher low and higher high breakout. So it doesn't matter how you want to trade it. There's plenty of risk levels you can manage from. You could either buy the dip near support or wait for the breakout, but I do believe the small caps could go on a very strong bull rally and start to play catch up here in the summer. On the ARKK ETF, we were down 0.13% today, and just like IWM, we are starting to develop a bull trend here, and we are getting the bull breakout above 45, so you could stay bullish in ARKK while it's above 45, or even better, use the risk level down here towards 44.8. Again, this is not an ETF that I personally suggest trading, but if you want to trade it, your risk level will be 44.8, and you can stay bullish above that. On the VIX, we were down 0.88% today, and the VIX is still crushing and trading near these very low levels, which means low fear with strong bull trends. That is exactly what you expect to see in a bull market. So do not expect to see high volume panic selling unless we start to see a spike in fear and the VIX getting out above 15. On Bitcoin, we are currently trading just above 56,000, and Bitcoin is a very interesting trade right now because I told you above 58,000, you could buy the dip towards 64,000, and then we got that trade sold off at the lower high rejection, which I did tell you was a good probability because of the downtrend. We got the lower high rejection, and then we broke down below 58,000, and I told you below 58,000 we could go to 53,000, and that's exactly where we found support just above it. So this trade worked in both directions, and it was all based on price action. You could have traded it long, sold your long, and either went short or at least expected it to go lower. It failed to hold 58,000, retested it as resistance with a perfect lower high rejection down into support, and now we have a trading range between 53,000 and 58,000, and above 53,000 I am leaning towards buying the dip and getting ready for another bull rally. If it breaks below 53,000, that's going to be an extremely risk off indication, and we could see a bit of panic selling, so do be aware of that. On Nvidia stock, we were up 1.88% today, and we are still closing above 122, which is the critical risk level, and the bulls can continue to stay bullish above this risk level, and they now do have a higher low into a higher high breakout. So if you want to stay bullish, you can now up your risk level to the breakout, which is right around 126. And do keep in mind, even with this bull breakout, there is still a bearish scenario where this is all a lower high before we continue lower towards 115 and then 107. Now, that is not the scenario I prefer while we're above 122. So if you're wanting to get bearish, you really should be waiting for a breakdown below 122. Now, while we're above 122 and 126, it's still possible for a brand new all-time high. So it is likely we could still be in a bull trend, and you can see these moving averages are starting to cross back over. So stable above 122 and 126, and then if we break below 122, that is extremely bearish and you should be getting risk off. On Tesla stock, we were up 0.56% today, and this thing went on an absolute tear, which I was warning you, this is breaking out of a multi-week consolidation, and there was no way you should be considering shorting this stock. And I even told you that you would have more enjoyment and entertainment by simply lighting that money on fire and watching it burn. And boy, oh boy, did you burn that money up if you were trying to short Tesla on this bull breakout. Because after we got the bull breakout, in just a few short trading days, we are already up over 28%. That is by far a short killer and face ripper. And if you got caught trying to short that bullish freight train, you absolutely got destroyed. And that is why you don't short strength. Strength is a bullish indication, which means you should be buying into it and not selling it and not trying to short it. And that is why I told you when something gets a bull breakout after a multi-week consolidation, that is the most bullish setup you are going to get based on following price action. So the bull breakout above 197 brought us well into our price target in the 220s, and then of course we exceeded it and got all the way into the 250s. If we break above 255, I'm looking for 264 and then 274, and you should be staying bullish above 244, and if we break below 244, we'll likely come back down towards 230. On Apple stock, we were up 0.65% today, and we slammed into the price target, and I told you Apple was another bear trap because it looked like we were getting this bear-bodied candle, which a lot of rookie bears are just going to blindly short, but when you realize it's a bull trend and that is the higher low before the all-time high breakout, you realize that is a buying opportunity, and boy oh boy was that a buying opportunity, because from that close to today, we hit the price target and we went up over 8% in just a week's worth of trading. Again, you have to identify the price action here is that it's a bull trend. You buy the higher lows for the low risk entry. And that is why we hit the price target right on schedule, which was going to be between 226 and 230. Now you have the bull breakout above 218. So you're staying bull above 218. You could start to lock in some profits here at the price target, but that doesn't mean we can't continue to go higher. Remember, this was risk on unless we broke down below 207, and we never did break down below 207, so that invalidated the bear scenario. We knew to stay long while we had the bull trend, so we never got out of the long trade, and this is how you continue to nail a bull market. So Apple stock is looking bullish. There's no reason to think otherwise, and we need proof from the price action if we think we're going to lose the bull trend. So jumping back over to the S&P 500, we are absolutely crushing this market by getting into the highest probability trades with the best risk reward setups and keeping that mindset that you need to be a bull in a bull market, looking for those low risk entries with those high rewards and continue to take those high probability trades to absolutely crush this market. That is what we're doing in the Discord server, and that is why we are crushing the market. So if you want to come crush the market with us and get access to all of my trade ideas, my intraday updates, and my technical analysis, you can join the Stocks Channel Discord by clicking on the link in the description of this video. It's going to be a very exciting and likely volatile summer, which is great for traders, so now is a great time to get plugged into the Discord community. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.